chart reading for noobs. Before I go on, thank you so much for the likes, the shares, the comments, the tweets. Please keep them coming. This is the first video that you guys have suggested, so thank you so much. If there's anything else you'd like me to clear up, anything you'd like me to talk about, please let me know and I'll dedicate a video just for that. So let's get right into it. To put it simply, when people are optimistic about the future of an asset, this asset is any publicly traded thing, the price will probably go up. If they are pessimistic, the price will go down. Lots and lots and lots of factors affect this, which is why it's really important to do as much research as possible. At the end of the day, we can't really know for sure what is affecting it, but we can try and speculate. This is speculation. We are putting money down as investments, speculating that these investments will perform well. In the stock market, you can make money if the assets get more valuable or less valuable. Over here, it's all about the growth. This might change when Bitcoin gets listed on the CME index, but let's see. The first thing that you need to see, the first thing that you will see on any chart are these weird things. They're called Japanese candlesticks. There is actual beauty in the simplicity of these candlesticks. So just pause the video, have a look through. The top of the wick is the high of the day. The low is the lowest point that asset reached in that day. Not necessarily the day, but in that measurement interval. The bottom of that candlestick body is where it opened at. So again, the start of this price interval that you're measuring. Close is exactly the same thing, but of course at the end of the day. Charts are made up of several candles, and each candle tells the story of what happened to the price of that asset within that limited measured period of time. So to see how these work in practice, I'll bring up the most recent Bitcoin chart. These are candles, each with a 4-hour price interval. So you'll notice that the red ones are colored in. That's because I'm a little risk averse and I like to see when it's going down before I consider how much it's going to go up. That's just my own preference. Some people have solid candles. I like it like this. So there. Easy enough. Self-explanatory. Then, if you look down over here at the bottom, you will see these lines that show the volume. The higher the volume, the higher the volatility. The higher the price movement. Volume and price action go hand in hand. The next fairly important yet simple concept is called support and resistance. You can see these lines that I've drawn on the chart. Those sort of signify the next threshold that the asset has reached. If we look at the line closest to the bottom of your screen, we will see that that line intercepts two parts of this graph. One is a trough, one is a peak. The peak comes first, and that is what we call resistance. When an asset rises, there will always be people who are happy with their gains and they will cash out. As the amount of people cashing out increases, this price action meets resistance. So then the graph will probably go back down. Once it breaks that resistance, it will go on to find new resistance. But then once it meets this new resistance, it'll go down again. And when it goes down, the old resistance line tends to become the new support. It's not a hard and fast rule. It's just a thing that tends to happen. And that's just because there are people running this market. This is not an automated market. These are human beings making buying and selling decisions. And we know human beings, while fairly irrational, like patterns. So people have sort of drawn these lines in the sand just as part of nature. So what we can try and do is use these grid lines that other people have set to profit in this market. At the end of the day, we are not these massive players with millions and millions and millions to spend in the market. We are all little fish swimming amongst the massive whales. We need to play the whales game. I'll link a video in the description, and it's by my emotionless partner in crime, Scramble Paul. He tells you exactly how to find these patterns when swimming with the whales. But for now, try to spot these patterns, try to draw these lines on your own charts so that you can start noticing when you should buy, when you should sell, whether something can go up or down. So this is why people tell you to buy the dip. When an asset is rising and rising fast, these things can overextend themselves. So for every up, there's a down. Once the asset goes up, there will be people selling, the price will pull back. That is when you should be sharpening your buy offers. Do not buy an asset when it's up. You buy low, you sell high. So once you see an asset has gone up, you should probably add it to your watch list. Keep watching this. Look for this attractive buy opportunity that might happen when there's a pullback. So I urge you, just look at the graphs for your favorite coins and just try to tally these support and resistance lines and try to compare it with the current price action and see where your next favorable buy opportunity would be. These charts are up for interpretation. There is no right or wrong answer, and the movements of the price do not necessarily need to follow these hypotheses. But what we are doing by looking for these patterns is trying to reduce our risk and to make decisions based on more factors than just currently, oh, I like this coin. Oh, this coin is going up. We need to think a little longer term, because thinking like this and making these snapshot decisions are the best way to lose a lot of money in a market as volatile as this one. So, to continue with the question I got from Sunny on Twitter, what makes a good coin to hold? You might see I've written HODL. HODL is the technical term, not really technical, but it's a term in the crypto community. Like all good things, it started out as a mistake. It was supposed to be hold, but then we've abbreviated it. It now stands for hold on for dear life. When selecting a HODL coin, you're in this for the long term. You want to buy this coin at a nice low price, hope the value skyrockets, and you cash out with several times. You hope this is going to be a multi-bagger. So you hope you can cash out with several times returns rather than just a high percentage return. So, what makes a good HODL? If you're new to the market, HODLing is possibly what you're in there for. Because a lot of people say, oh no, I don't want to research the market every day, I don't want to see everything that's happening, there's too much happening, the price is so volatile, I just want to buy it, leave it, forget about it, visit it again in a few months, in a few years. Okay, that's totally cool. There are a few coins that the community is overwhelmingly positive about. There are. And this is reflected by the size of the market cap. Go to coinmarketcap.com, and the first 15-20 coins are really the only ones you should be looking for if you want to just buy and forget. A lot of these are what we call network tokens. So these are blockchain-based systems that provide, firstly, just the payment options, but then after that, they want to build a whole bunch of functionality onto this system. We call that a network token. Ethereum is the first major network token. Then we've also got Neo, which is a Chinese Ethereum. And we've also got EOS, Raiden. If you saw my earlier video today, Raiden wants to be a network token too. Lots of these companies are trying to expand the functionality of their currency beyond just payment. So these are the ones that have massive scope for growth, especially if they're adopted, which is actually the key point when investing in cryptocurrency. The only thing that will guarantee price action and an increase in the price is adoption. If this will only happen if the community is willing to actively participate in the development of these technologies. The community is everything in cryptocurrency. You don't need to be an active member, but you need to have access to this information. Read. If you're going to put money down on a long-term hold, you have to do your research. You have to. And part of that research should be looking into the team. So just like in startups, your investors, while they are investing in your solution, they will choose to invest in you because of your team. The people behind the idea make the idea a reality. And you cannot overlook this when you are looking at investing in any coin, but especially a long-term hold where you are going to put money down, not really touch it, and hope that this money helps further the cause of this project. And finally, don't want to sound like a stock record, but buy the dip. Do not buy a coin when the price is high. Okay, if you're planning on keeping it very long term, a 5-10% difference won't really matter. I'm pretty sure you'll feel good if you're looking at the markets and you see, hey, this is up from where I bought it at. So you just want to try and minimize your risk and see how much vertical price movement you can possibly get with your purchases. And of course, people are not only in this for the long term. If you're in it to make money, everyone's in it to make money. You're not a psychopath for wanting to do that. It's totally normal. It's totally fine. But you need to remember, short-term and day trading in cryptocurrency, especially if you do not have a clearly defined strategy, is a recipe for failure. There is no guarantee of returns, but if you really do want to play the short game, please do this at your own risk and do this with money that you can afford to lose. No one knows how this market is going to go. If anyone tells you they know how the market is going to go, they're clueless. Do not listen to them. Move on. But there are indications that something might be better than a straight 50-50 toss-up. And that is trading volume. If the volume quickly increases, the chances are this could go up. What influences trading volume? Well, if a coin is at the top of people's minds in terms of what they've been reading, in terms of announcements, you could expect this price to go up. And yes, currencies can go up and down a lot in a single day, which is exactly why you need to set your targets. The moment I buy, I put my coins back on the market for sale with my targets already included. I don't mull over the coin. The moment I buy it, I go straight to the sell tab and I list a sale. And then I will only evaluate this if things aren't really going my way. If I've suffered a massive loss on this purchase, I adjust it so that I can get as much money back as possible. But the thing is, you don't really need to sell at a loss in this industry. I have a few coins that are about 50% down, but I have had other coins that are over 60% down and I recovered everything. So do not worry. Do not worry. If you can afford to hold the loss, hold the loss. If of course you need money very, very quickly, I can't blame you for selling at a loss, but everything is a case-by-case scenario. If you do want to partake in day trading, I suggest you look at this chart. Learn it, learn it, learn it, learn it. These are common patterns that people can spot regarding quick moving price action. I'll attach this image in the description, but you need to remember that this image also considers price movement downwards because this is designed for the stock market. So learn this, learn this, learn this. Try to find these patterns in your favorite altcoins as well. You will only notice these patterns if you've practiced looking for them. So please, please, please search, practice. But once you spot these patterns, you can punt. I do this all the time. Some of them work, some of them don't work. But what we can do with this technical trading stuff is try to minimize our risk. There are no guarantees whatsoever. But what we can try and do is manage the risk. There's your 101 crash course. If you think I've forgotten anything, please let me know. Tweet me, comment on this video, like this video, subscribe, tell your friends. And if you do like this sort of instructional video, or you do think I can improve in some way, please let me know. I'm open to all your suggestions. So this is Marvin Crypto Simplified signing out. Have an awesome rest of the day and see you tomorrow. Thank you.